Every day I keep hearing about people waiting for the return of the retail investor to pump their bags of fart coins and dog coins and all these things. But is this cycle different? Will the retail investor come back to crypto, or is it possible, and this is just a theory that we're going to talk about today, or is it possible that they are already here? So remember, every single day in crypto is an adventure. If you're not a subscriber, please hit the subscribe button now. Follow along every day as we talk about crypto and all things related. So remember, retail is coming back to crypto. We know that. I mean, retail is going to come back into crypto, but they're not buying Dogecoin or aping into Uniswap right now. Instead, is it possible that they're flooding into the ETFs and crypto stocks like Coinbase or MicroStrategy? What is going on here? Why does it matter? Will they come back, or is this how they plan on coming back? Remember, everything that I say here should not be taken as financial advice. I'm not a financial advisor. And with that, let's get into talking about what I am talking about here, and that is the return of the retail investor. But did they return, or are they already here? So look, I look at the market cap of crypto right now. We are far and above where we were last cycle. We topped out at around $3.7 trillion into the crypto markets. We're sitting right here around 3.2, so we've had a pullback significantly since our first pump. And a lot of people saying that the retail investor isn't here. They're not searching on Google. They're not searching for the latest coin out there. But is it possible that their risk has been suppressed, their appetite for risk has been suppressed a bit? Is it possible that instead of going through exchanges where you have to have wallets and keys and all these things, that they're saying, listen, I like the risk assessed by the SEC. I'm going to go through an ETF. I'm going to go buy the stocks surrounding crypto instead of buying the crypto itself. Or I'm going to buy some things that might hedge the risk just a little bit. So if you look at the Bitcoin ETF, there's $125 billion locked in the Bitcoin ETF. Now that pales in comparison to the 3.2 trillion in crypto together, but this is a one way that people that don't have high risk appetites for figuring out different, especially our boomer generation, figuring out how to, create a crypto wallet, how to transfer money, how to on-ramp money, what is a KYC and all these things. They're looking at, hey, I just go to my broker and buy Bitcoin through the exchange. I mean, they look at iBit as the same as Bitcoin, even though it's not quite the same thing. They can buy it through Fidelity, Grayscale, Arc, all these ones that they're very familiar with and that they already have trust in, that they can go and buy these things. You look at the Bitcoin dominance, it has soared. I mean, not just in the last, what is this, since November, which it has. But look, Bitcoin dominance has soared since August of 2022, where we were down here at 38%. We've been rising ever since. We saw a greater rise in this than the rest of the crypto market, obviously. But, the BlackRock has bought, $65 billion of, how much do they own? BlackRock, $65 billion of Bitcoin. Now, BlackRock didn't buy that for themselves necessarily. They bought that in response to their customers buying iBit. Customer buys iBit, they have to, they own the Bitcoin behind it. They have to buy. If their customers sell iBit, they have to sell iBit. I don't know if they have to, but it would make sense that they would sell iBit or Bitcoin for their iBit. Now, look, that is very telling right here that this market, I mean, we've seen a steeper incline in the last couple months of Bitcoin dominance. It fell off. We thought we were in altcoin season. But is the money going to rush to the altcoins, or did they learn their lesson last time around and they're burned? And do you think that retail is going to run into Dogecoin, which they've done in the past, or do you think they're going to potentially buy something less risky because they got burned last time around? Is that possible? It is possible, but is it likely? So I'm looking at this is money market funds across the country. And if you look, there's been there's been a little bit of decrease in money market funds in the last week or so. But overall, there's about, what is that, almost $7 trillion in money market. Even more so, we've seen a rising interest, since July of 2024, or June of 2024, May of 2024, we've seen an increase in the M2 money supply. That's the money that's basically sitting on the sidelines, not really invested in something that's, it's in typically money markets or in cash or things like that. It's not typically invested. And we've seen a rise of about, 0.76 trillion or $760 billion increase in that. So that means that people aren't running back to throw their money in the markets. They're a little bit skittish. They're a little bit shy. But is this time around, I said, are we going to have a different type of market? Is the difference this year going to be the ETFs? We didn't have those last cycle. We didn't have a safe on-ramp of money. We didn't have a place to go. We didn't have a lot of stocks. I mean, Coinbase, I can't remember when they went public, but I don't think they were public last time around. You have Coinbase. We didn't have a strategy saying, give me money, I'll invest it in Bitcoin, and you'll see the stock rise. Now, I'm not saying that personally. That's kind of what they're pushing. So we didn't have all these ways to get into crypto without actually buying the crypto. So is it possible that the retail investor has changed, that they've moved, they've become more sophisticated, less degen? Is that possible? Yes, it is certainly possible. But I don't care what anyone says. If I make a ton of money in Bitcoin, I might just feel that, get the hankering, get a little taste, and want to see, is there something a little bit more risky I can put my money in because I've done so well with Bitcoin? And this is human nature. This is the reality of people. And so this market might be a little bit different. We might see people not ape into any kind of poop coin or whatever, but they might get that taste and become a degen after the fact. But I look at my dad's generation, and they bought it iBit. They don't see them going into, some exchange where they don't even have to KYC and they have to on-ramp their money through a different means to buy it and all these things. I just don't see that happening. But I will tell you, the younger generations that are comfortable with technology, even younger than me, this is who is the next wave of crypto investors. If they can understand what the difference between traditional finance and decentralized exchanges and versus their bank, or traditional finance and the DeFi situation. So I do believe that we will see retail come back in, but I think they're here. I think a lot of retail that wasn't here before is here now. They're buying the ETFs. They're getting a taste for it. And as soon as their bank allows a custody of crypto, they might buy the Ethereums or the Solanas or the XRPs or the ones that don't necessarily have ETFs on the horizon. Maybe they'll get involved with them. But right now, I do see that retail is here and they're making an impact in the market, and they're really affecting the big coins like Bitcoin. Not really Ethereum yet, but I mean, if you just look at the difference in market cap, we have a significant difference in the total market cap of crypto. I mean, we're up 24% over the last market, the last bull run. We're up 24% in total locked or total value of this crypto market. And they're coming in through the side door of iBits and FBTC, GPTC, ARCB, all these things to buy Bitcoin in what they believe is a much safer environment. So with that, that's all I got today. Remember, this is a theory that I have that maybe this market is a little bit different. Maybe this market has a tinge of not as risk on type investments, but that could all change in a heartbeat when we have trade deals signed. Right now we're still under the 90-day areas of trade deals coming to an end or possibly continuing or getting worse. We don't know. It's the uncertainty in the market that causes issues for risk on assets. Crypto is a risk on asset. Now, it looks to be that Bitcoin is pulling away from risk on assets, but it's still coupled with tech stocks to some degree. With that is all I got. I hope you got some value out of this theory today. Let me know your thoughts down below. What are you doing about it, and what do you see happening? I will see you next time.